regulation is pretty much universal, but for example, if you go down into details, Islamic banks should have different liquidity requirements as opposed to conventional banks. Well, capital adequacy requirements from Basel 1, 2, and 3 try and look at Islamic banks in the same manner that they look at conventional banks. But all over the world, wherever Islamic banks are operating, they are talking to regulators, and they are trying to make sure that there should be a separate set of guidelines that should take into account how Islamic finance operates. So pretty much, while today Basel III completely ignores Islamic banks and puts everybody in the same basket, I think those times are not far away when people will take this a little differently, and they'll realize that capital allocation for some of the risk-weighted assets in Islamic finance should be different than capital allocation within conventional banks. It's an aspiration that I have, and I can see giant strides because there are bodies within the world like the IFSB, Islamic Financial Services Board, that is putting a paper together that will be submitted to Basel Committee for regulating Islamic finance, and that paper talks about capital consumption, it talks about capital allocation, it talks about liquidity requirements, it talks about liquidity tools. So yes.
And this will be basically on the basis that the risk profile is entirely different.
The risk profile is different. Islamic finance is more asset-based and asset-backed than just trading in debt. So I think you cannot have a straitjacket approach to all of this. Eventually, people will align themselves, whether it's a Basel committee. But giant strides are being made. It's not going to happen overnight. It's still a 40-year-old industry. You need to give it some time before you start comparing it with a 400-year-old industry.
What's the question?